Hello, everyone. Great to see you on video. My name is Alex Gall, and I'm a 2017 graduate of the University of Dayton. I currently reside in New York City. I'm a part of BlackRock's institutional client business and have been at the firm for about 4 years. But prior to that, was a senior manager of the Davis Center. So really excited to be moderating the session with everyone today. I just want to say thank you to everyone who's submitted any questions in advance. We'll be sure to address those during our Q&A portion of this event. We are also recording today's presentation, and it will be added to the UD Digital website in the next week or so, where it will be available to the public. And today's webinar is part of a series that the Alumni Association has been doing since October to highlight student organizations. We'll post a link in the chat in case you're interested in doing any of those recordings. Today's session will focus on the history and accomplishments of the Davis Center for Portfolio Management, how they've adapted this semester in light of COVID, and how they continue to build community on campus. With that, I'll turn it over to Professor Dan Kapusta, the director of the Davis Center, to get started.
Alex, thank you. It is our pleasure to speak to the alumni of the university. Go Flyers. Today in the Davis Center, I have 3 students, our senior manager, Chris Flynn, and 2 of our associate managers, Bridget Momper and Jack Phelps, joining us to talk about the accomplishments, the history, and really where we're going forward. When Alex was the senior manager of the Davis Center, we had assets roughly around $23 million. And 4 years later, now we have assets that are a little bit more than $50 million. We are the second largest student managed fund in the nation. So, but you don't want to hear from me, you want to hear from our students. And I'd like to turn the program over to our senior manager, Chris Flynn, who is a senior from Nashville, Tennessee, double major in finance and accounting. Chris, take it away.
Thank you, Professor Kapusta. Awesome. So thank you, Professor Kapusta. As Professor Kapusta mentioned, my name is Chris Flynn, Senior Manager of the Davis Center. And we're here to talk to you today about what we do and kind of what we've been seeing in the market, as well as the experiential learning that goes on here. Before we begin, we really just want to highlight that we dedicate this event today in this presentation to SVA Dean John Middlestat. He's been an instrumental piece of the Davis Center, especially in the past couple of years, with the fact of being a huge part of setting up the partnership that we entered with the Dayton Foundation in 2019, along with providing us with FactSet, an equity research tool that was imperative for managing the fund during the beginning of the COVID-19 pandemic. So getting into what the Davis Center is and the Flyer Investments Fund, essentially the Davis Center can be thought of as a 100% student managed portfolio managed by 60 undergraduate students. And this is a flagship experiential learning opportunity that the University of Dayton Business School offers. As a physical structure, the Davis Center is most tailored to look like a Wall Street asset management firm that's equipped with industry-leading technology that we use for our research, such as Bloomberg, Morningstar, FactSet, and S&P Net Advantage. Getting into the background of the Flyer Fund, Flyer Fund was founded in 1999 with $1 million. That's a portion of the university's endowment, along with our new partnership of $2 million with the Dayton Foundation. Currently, we are just south of $50 million, which makes us the second largest undergraduate student investment fund in the nation. And as I mentioned, the new partnership with the Dayton Foundation has helped us further our goals of experiential learning and has added asset allocation and service leadership even further into the mix.
Everyone, my name is Bridget Momper and I'm a junior. So our investment process is twofold, with both a macroeconomic analysis and then a fundamental research component. In terms of our macroeconomic analysis, we track key indicators to adjust our exposure to certain sectors of the S&P and then also certain industries as a whole. So our economic analysis team leader, Fouad Saleh, and his team will put together a report at the beginning of each semester, which determines our weighted position in each sector. So we decide whether we want to be underweight, overweight, or neutral to the benchmark S&P 500, as well as they create reports on economic happenings at the end of each semester, and then a 10-point economic summary that is sent out at the end of each week. Then taking a look at fundamental research, we invest in companies according to a GARP philosophy, which stands for growth at a reasonable price. So when we look at potential stocks, we are hoping to invest in those names that have a sustainable edge. So whether that be a wide or a narrow economic moat, those moats are normally driven by switching costs or intangible assets, economies of scale, just to name a few. And we also want them to be compounders of capital and that they are trading at what we deem a discount to their intrinsic value. Then as far as portfolio construction, we have our 5 sector teams that present a total of 4 new pitches each semester to the Portfolio Investment Committee. And that committee is made up of our Finance 493 class as well as our management team. So in total, we bring 20 new stock recommendations to our bullpen each semester. And then upon a 2/3 approval vote, we buy into that specific security. Then taking a look at our structure of the Davis Center, at the very top, we report to the advisory board, who we meet with at a minimum of once a semester to provide portfolio updates as well as economic updates. Then right below that, we have our director, Professor Dan Capusta, who you heard from before. He also teaches our Finance 493 class, which is a senior level course that we pitch our stock recommendations to. Then below him, we have our senior manager, Chris Flynn, and then our 5 associate managers as well, who I will discuss in just a moment. But each associate manager, aside from our economic analysis team leader, Fouad Saleh, all lead their own sector team. So looking at our individuals on the leadership team, we have Chris Flynn, who is with us here today, and he acts as the energy, materials, and industrial sector team lead. And then Jack Phelps, who is also here today, and he leads the technology sector. And then Gurkamal Panu, who is both our head of the financials, real estate, and industrial and utility sector, as well as our head of the securities analysis team. And then below Chris is myself. I serve as the head of outreach and the consumers discretionary staples and communication services team. Next to me is Fouad Saleh. He serves as the economic analysis team leader. And then finally, Jack Ward, who is our junior associate manager, who serves as the healthcare sector team lead. And then taking a look at our new member program. So if you're interested in joining the Davis Center, you go through an application process and then a 2 to 3 round interview process as well. Each fall, we take around 4 to 6 new sophomores or juniors, and then follow that with our freshman recruitment, which is typically 10 to 12 new freshmen. And then upon entrance, you go through a 10-week intern program, which you're basically taught everything that you need to know during this time. And you get caught up on the fundamentals of investing, research, and the Davis Center process. So the training program centers around equity fundamental research, technical economic analysis, accounting, and then how to build your discounted cash flow models. And then after finishing all of this, the program culminates in a stock pitch to the leadership team and the rest of the Davis Center analysts. And then you finish with your exit interviews and become a full-time member. And with that, I will pass it over to Jack Phelps.
I'm Jack Phelps, and I'm a senior finance and accounting major from Los Altos, California. And following graduation, I'll be joining BMO Capital Markets Technology Investment Banking team in San Francisco. And I will be going over a brief kind of market recap and outlook so you guys can get an idea of what we think of from a top-down perspective, what Fouad and his econ team kind of think about, and then you can think about and kind of understand our views on the market. So we'd be remiss if we didn't mention the COVID-19 pandemic, which marked the longest or the end of the longest economic expansion in history on record from 2009 to 2020. And this contraction really came from authorities on a global level to curb the spread of the coronavirus, halting a lot of global activity with sharp declines in unemployment, manufacturing, global trade. Pretty much most of the economic indicators we like to be positive were negative, and that was certainly reflected in the markets. So that really is what spurred from a late February peak in the S&P 500 to our fastest trip ever into bear territory, with the S&P 500 falling almost 34%, the NASDAQ about 30%, and U.S. Treasury hitting all-time lows. To combat this in late March and part of the rebound effort, the Federal Reserve and Congress announced their expansion response plans to curb the pandemic and support our economy. And this has been, and we've seen it be extremely successful. With from March lows, the S&P 500 rallied 60% plus, the NASDAQ's rallied over 72%, and yields have climbed over 35 basis points. And now looking to kind of our global GDP and outlook. So Q3 2020, as a result of a lot of the stimulus that we've seen from a governmental level, as well as an increase in consumer spending, we saw GDP come out at the staggering 33% increase. Obviously, this is due to pretty weak comps in Q2 due to the coronavirus. But I think it's reflective of the fact that we're seeing record pace in household spending on a lot of discretionary items, which is certainly important for a healthy economy. And then we saw in Q4 2020 GDP came in at a 4% increase on an annualized basis, slightly below consensus, but obviously a positive. And again, that came from consumer spending and investments with a headwind from governmental spending. And as you can see, consumer spending increased 2.5% and gross private domestic investments surged, which obviously is good historically. And then looking forward to 2021, you can see in the graph below reflected the different estimates from a lot of the different research houses, including the IMF, which is projecting roughly 5% growth, the World Bank projecting 4% growth in GDP, and then at a global level, the world output is expected to grow 5.5% in 2021. So overall, and with all I've kind of mentioned so far, despite the coronavirus pandemic, we're really optimistic looking to the future. Obviously, as Chris mentioned, in our investment philosophy, we look for really strong businesses that are going to be able to perform well in any economic environment, which provides us a lot of confidence in the names that we hold. Though obviously we're looking really closely at things like valuation and things like that. And now moving on to the Flyer Fund performance. So this is something that we're really proud of in the Davis Center. Obviously, we spend a lot of time looking at pitches and ensuring that we're being good stewards of the university's money. And we're super proud of the fact that on a year-to-date, 1 year, 3 year, and 5 year basis, we not only have outperformed our S&P 500 benchmark, but also our large cap professional blend peers. So I think this is a true testament to both the work that we do in the center, the intern program, the amount of training that we have, as well as the process that we have in place. So it's something we're super, super proud of. And from a cash on cash kind of return perspective, we've generated approximately $36 million in capital gains since 2010. So obviously we're super proud of this figure, and it's certainly motivating and rewarding that a lot of the work that we put in, we're seeing a positive result.
Thank you, Jack. So before we open it up to questions, the Davis Center and I wanted to show where we end up after college, after we're done with this experiential learning opportunity, where we end up. And really, this is finance jobs all across all areas of finance, such as investment banking, sales and trading, asset management, as well as many others. And really, this placement is due to both the experiential learning that everyone gets out of being a part of the Davis Center, as well as our strong alumni base, who's always been willing to help and really has been instrumental in helping UD students find jobs. And with that, we can open it up to any questions you all have.
Thank you, Chris. Thank you, Bridget. Thank you, Jack. We've been getting a lot of good questions in the chat. I encourage everyone to continue to ask those, but we definitely want to spend a few minutes highlighting some of them. Maybe I'll start with one, and it goes back to the slide, Chris, that you just showed about job placement. These are some pretty incredible firms that you all are sort of landing opportunities at post-college. What do you think, at least maybe individually, has been the most impactful part of being a member of the center, or a leader in the center, that you believe sort of allows you to take on such great opportunities after college?
Absolutely. I think going back to the job aspect of it, I can say at least the three of us on this call, as well as Many of the seniors would not have gotten any of the internships or full-time offers without, an alumni helping us through the interview process or getting us in a process in general. In terms of the best part about being in the Davis Center, for me personally, has been, I think like the leadership aspects of it have been very influential in my learning, and the fact that I get to go in every week and lead the energy materials and industrials team and have successes with them has been a really great experience. I think the camaraderie in the Davis Center is also a part that I really enjoy. We're all really good friends in here. And when you're spending this amount of time together, that's pretty important. So I would really say, the camaraderie and then the leadership aspect of it has been the biggest parts for me.
Alex, let me add one thing if I could as the director. What I'm very proud of our students is service leadership. And when they come back from their internships as a rising senior, they could be at JP Morgan or BlackRock or at Jefferies, they hold an internship roundtable with the underclassmen. And once they are secured in their job, they are typically basically dialing for dollars on behalf of the other underclassmen to get internships. And it's really that strong camaraderie as the director that I'm so proud of what Bridget and what Jack and what Chris do and what you have done specifically when you've been a graduating senior and helping us place people at BlackRock.
I'll just add on to that real quick. The learning curve is definitely one of the biggest things in my eyes. I know that I came in barely knowing the difference between a stock and a bond, and now being a junior and looking back on all that I've learned in just a short 2 years, it's really, really impressive, but very cool. And I think Chris kind of spoke to this. A huge part of it is the people. Being surrounded by a lot of very intelligent but very curious people is a really, really great place to put yourself in. And I have met my best friends in here, so it's great. But at the same time, they push me every single day to be a better student and also a better investor in general.
It's sometimes, I know that how much work goes into the day-to-day management of this portfolio, at least speaking from my own experience when I was involved. And so it's great to see that bear fruit for all of you. We got another question from an alum. Maybe I'll pose this to Professor Kapusta. I think you mentioned the Davis Center is maybe the second largest student fund in the nation. We got the question, what is the largest, and sort of what's that size? How do we sort of stack up to the other peers?
Yes, the largest fund is the University of Minnesota. They have approximately $51 million of assets under management as of the end of December. So we are neck and neck with them, and with a good market, I think we'll actually surpass them sometime, hopefully in the next 12 months.
Awesome. We'll keep up that good performance. One other question we got recently, are most of the members of the Davis Center finance majors? And I guess the second part of that, do you open the Davis Center up to non-finance majors or non-business students in general?
We are open to all majors. We do have a couple engineering and then medical students, but for the vast majority of us, we're all finance or accounting or econ. And a big part of that is just because we're putting in so much time into the Davis Center that it's really more worth it to be doing something that your career path is going to be. So yes, we're open to all majors, but the majority are finance. And
I also want to call out, obviously 2020 and even the start of 2021, it's been such an extraordinary time with COVID. And maybe a two-part question. First being, when the campus went almost fully remote and you were sort of forced to separate, but the day-to-day management of the portfolio doesn't stop. And quite frankly, volatility in the markets was pretty high. How did you all manage to continue, delivering for the endowment? That's sort of part one. And then two, as you look ahead for sort of the prospects going forward in a post-COVID world, how are you thinking about positioning the portfolio going forward?
It's a really good question, and definitely not a challenge that me, Chris, or Bridget, or really anyone on the management team thought we were going to have to tackle. But it's one that we took kind of as a precautionary note, we try not to be selling all of our names right away. Try not to be frantic sellers and kind of a buyer's market, so to speak. Also, when we were sent home, we have year-round management. So everyone on the management team over winter break, we meet, and then over the summer we meet, obviously just to make sure that if there's anything going on in the portfolio, we're not completely abandoning it over the summer. And then this past summer, where we'll usually meet once or twice a month, we met at least every 2 weeks, just to ensure that if any names had huge news or were really doing poorly or outside of what we're kind of mandated from the university, that we could take quicker action. But again, we tried not to be too frantic and be patient with any names that we were going to sell, and really think about our positions from a long-term focus. That's definitely a luxury of a long-term focused fund, is we can stomach that short-term volatility. In terms of positioning our portfolio moving forward, we're definitely taking a closer look at leverage. There's a lot of companies that have become a little bit more risky. I think there's been opportunities in the market that we found. Obviously, trying not to buy stocks that are overbought because of the pandemic, but I think there's work from home stocks that we like. There's some that are rebounding from things like oil prices and things like that. So we're trying to be strategic in terms of trying to find names that are going to do well out of the pandemic, but at the same time, ultimately just looking for high quality compounders of capital over the next 3 to 5 years without too short of an investment thesis. But that's kind of how we're thinking about it. Hope that helped answer your question.
Another question we got: does the fund invest in single name stocks only, or can you also invest in, say, ETFs or mutual funds?
Well, I can take this one. In terms of the Davis Center itself, it is only strictly stock transactions, and for that matter, only long-only stocks. So we're not shorting anything. We're not doing any option plays or anything like that. But with our new partnership with the Dayton Foundation that started up in 2019, that our flyer fund, which is comprised of all stocks, is only a portion of that fund. And the rest of it is all ETFs that range across fixed income as well as international and some small cap and mid cap ETFs. And so that partnership has also implemented the fact that we needed to learn how to asset allocate and how to make strategic asset allocation plays within markets outside of large cap US.
Thanks, Chris. You mentioned the Dayton Foundation. I think that is a super exciting collaborative partnership that we all saw. We'd love to learn a little bit more about the work that you're doing with them. What's that sort of interaction look like? And then we also got a question: are you seeking additional investment partners, in addition to Dayton Foundation?
The Dayton Foundation is a very new relationship. We were very fortunate to gain them as a client, I believe, back in 2019. And a huge part of that is thanks to our late SBA Dean Middlestat. But we meet with them on at least a semester basis and present to them our new plays and go over performance. We actually also donated our management fee this past semester with them. We donated it to DECA, who's one of the local high schools. And the main reason we did that was because everyone on management, we all feel very fortunate to go to such a phenomenal university. And we understand that higher education is a huge step forward in terms of your future career path. And we believe that every student and high schooler in Dayton should be given that opportunity, and any part that we can take in that, we want to be a part of. So myself and then our other associate manager, Gurkamal Panu, we were able to go over to DECA and give them the check, interview with the local news, and then meet some of the students. So that money will be going to their Young Entrepreneurs Program.
From that positive press, we managed just shy of $2 million. And we've had other alumni from the University of Dayton and also other community members from the community of Dayton actually commit more dollars to the Dayton Foundation and specifically allocate more dollars than to the Flyer Investment Fund because of that good deed. And we have committed with Dean Middlestat that we would give over 90% of our investment fee back to the community. Now, this set of students has decided to give it to DECA, and the next leadership team will make that decision as we come to that at the end of this calendar year.
Awesome. We got a related question, actually, as you mentioned, DECA and sort of the high school relationship. How does the Davis Center engage high school students, or do you? And what are sort of the upcoming opportunities for those high schoolers to shadow you on some of your projects?
On a normal school year, we would be doing a high school slot competition in the fall. Unfortunately, because of COVID, we had to cancel that. But we were actually able to create a revised version for the spring semester with the help of our special projects manager, Peggy Nicodemus. So it's now via Zoom, at least for the semester. It's still going on. It's an abridged version, so we teach them about the Davis Center and then the basics of investing. And it's really rewarding experience being able to teach high schoolers in the local area is really, really great. And then in addition to that, we normally would have middle schoolers coming in at least a couple times a semester and have some of our own analysts talk with them, teach them the basics of investing as well. It's more of a high level course than the ones that we teach to the high schoolers. So
I want to ask at least one more question, maybe to Professor Kapusta. As we've gathered, some alumni on this call, what are some of the opportunities for alumni to stay involved, either with the management of the Flyer Fund and understanding how the portfolio, all that, or just to engage with students while they're in college or after graduation?
There's really three ways. One is to network in terms of internship and job placement. Number one. Number two would be getting involved in terms of our advisory board, which Mr. Stahl is a member of. And then thirdly, on an annual basis, a non-COVID world, we're going to go out to New York and to Chicago like we have in 2019 and 18 and 17. And it's a great opportunity for alumni then to reconnect with our current students and listen to the story live. But that hasn't happened since, unfortunately, 2019. But we are looking forward to travel as the travel ban is lifted this fall, both to Chicago and to New York.
Great. Well, that may be all the time we have for questions. I want to just turn it over to the students if they have any last insights that they'd like to share.
Thanks everyone for joining this webinar today. Hope everyone has a good afternoon and go Flyers.
Thanks, everyone.